Hi guys, this video is an introduction to taxation. This is the second topic in fiscal and supply side policy. We've looked at government spending and now we're thinking about taxation. This video is going to cover two main areas. We're going to look at the introduction to the UK tax system and we're going to look at the main different types of taxes in the UK. In the next video, we'll look at some of the principles behind UK taxation and we'll evaluate some different types of taxes. To start with, let's remind ourselves of the key reasons behind fiscal policy. All fiscal policy is ultimately to achieve our macroeconomic objectives, as well as to solve microeconomic market failures. It's worth being aware that the fiscal policy is also in place to improve equity, which to an extent is a market failure, and provide a safety net for the poorest in society. Taxation specifically is motivated by the same ideas. Taxation exists to influence patterns of spending across an economy, to correct market failures, and to improve equity. A good term to know here is the idea of hypothecated taxes, taxes which are specifically targeted to raise money in order to correct a certain market failure. However, it's worth being aware that taxes are specifically and crucially to fund government expenditure. If we don't raise taxes, the government can't raise money to spend and would have to borrow everything, which wouldn't be a very good long-term strategy. There's two key types of taxes to be aware of in the UK. Direct taxes are taxes levied on income. So these are taxes that come directly out of an individual or a business's income streams. The best example of this is income tax in the UK, which is deducted from a worker's income, or corporation tax for firms, which firms have to pay out of their profits. Indirect taxes are taxes that are levied on goods and services. They're therefore paid by producers to the government, but producers can pass that cost on to consumers. Value added tax, VAT, is the best example of this. VAT is 20% at the moment in this country, and on most goods we pay VAT. But it's worth knowing some specific examples. Excise duties refer to specific taxes on goods like alcohol, cigarettes, fuel. A bit of context, this is from the spring 2020 budget. Expected total revenue from 2020 to 2021 was 873 billion in the budget. But it's worth being aware that that figure is subject to change. Income tax depends on how much people are earning, for instance, as to national insurance contributions. And so if unemployment rises, we'd expect those to decrease. Most of these tax revenue comes from direct taxes. So income tax is a tax on income, as is national insurance contributions, corporation tax, council tax, and business rates. All of these are linked to the income of a firm or of an individual. VAT and excise duties are indirect taxes, and other taxes, the 91 billion there, include a mix. So direct taxes take up most of where the government gets their money from. And we'll think in the next video about why that might be. Let's look in a bit more detail at different types of tax systems within a country by considering the ideas of proportional, progressive and regressive tax systems. A progressive tax is a tax where the marginal rate of taxation increases as income increases. That's a bit of a mouthful. Here's how to think about it. Under a progressive tax system, higher earners pay a greater percentage tax when they earn extra income. So if I were to earn £10, the percentage of that which goes in tax would depend on my income already. And that means the highest earners pay an average rate of tax that is higher. And the logic for that is really equity, firstly, that we believe it's fairer to let the poorer incomes households off a little bit more lightly. And it's an easier way to raise money. The argument goes that money matters relatively a bit less to the rich. And so by taxing them more, the government can raise its revenue more effectively. Income tax in the UK is an example of a progressive tax. So the rate of tax paid depends on income. Up to 12,500 at the moment, I can earn up to 12,500 without paying any tax. Any money earned beyond 12,500, I pay 20% of tax. 20, I pay a tax rate of 20%, and beyond that I pay 40%. Over 150,000 is 45%, which isn't on this table. Tax rates often catch people out, so here's a quick task for you to do. Pause the video and have a go at working out how much the following incomes would owe in income tax, both as a percentage of the income and as an overall figure. So for each one, you're going to give the pounds that they owe and the percentage of their income that they owe. Pause the video, have a go. Okay, here's what I got. The person earning 12,000 doesn't pay any income tax because they're below that taxable allowance personal income threshold of 12,500. Somebody earning 37,000, however, is above that threshold. They're into the basic rate, and they're going to be paying 20% of their income over 12,500, which I calculated as 4,900, which is 13% of their income. The person earning 81% gets into our higher rate of tax, 40%. And so we'll end up paying 19,900, which is about 25% of their income. And so here you can see a progressive tax system at work. As people earn more, the percentage of their income that's going in tax rises and rises. And the argument for that, as we've seen, is largely about equity. This is viewed as a fairer way to raise taxes than putting it equally across everybody. We can see that data here, and this is a chart from the Office of National Statistics digging into the different impacts on disposable income of different groups. So at the bottom, we've got the quintile groups of households. That means the 20% groups going from the poorest 20% at the bottom to the top 20% of incomes over here. And the dark blue box represents the amount going in direct taxes. So that's income taxes. These are progressive taxes. And you can see how progressive that is. The bottom group pay quite a small amount, contribute quite a small amount towards total income taxes in the UK, whereas the top group contributes a lot. Overall, the poorest 20% receive more than they gain in cash benefits and in benefits in kind. And this little dot that you can barely see represents the net impact, which is above zero. For the top 20%, they're net contributors to the tax system. That's that dot down there. You can see their net position. They pay out much more than they receive in cash benefits. So that's a progressive tax system. It benefits the poorest of society more than the top end. The opposite is a regressive tax system. This is a tax where the rate of tax paid falls as income rises. So lower income households spend a larger proportion of their income on the regressive tax. We normally think about indirect taxes when we think about regressive taxes because poor households are likely to spend a greater proportion of their income on these goods. So take, for example, alcohol or cigarettes. Poor households are more likely to spend a higher portion of their income on something like cigarettes. And that means that as a portion of their income, the amount going on that tax is greater. Here's a chart showing that. If we were to look at the amount going to the government in tax as a proportion of expenditure, it's fairly equal across the groups. So take VAT. Most of our different household groups, and this is the same idea, different groups of households, the poorest 20% are down here, and the top 20% is up here. They're basically contributing a pretty equal percentage of their income to the government in tax. So what this means is if I go out and spend £100, 17% of that, roughly, is going to the government as VAT. And that's, as we'd expect, pretty consistent across all of them because we're paying indirect tax on most of what we buy. But if we look at that as a percentage of income, it changes. And what's really going on here is that the top group of households don't spend as much money. They're saving more, they've got a lower marginal propensity to consume. The bottom 20% spend most of their money. That means their expenditure is a higher portion of their income, So more of their income is going on these taxes. Therefore, these indirect taxes are regressive. It's a fiddly idea, it should be straightforward to get, but if you're struggling, watch back through these last few minutes and see if you can figure out exactly what I mean by a regressive tax. I'll put an explanation in the video description or in the VLE task to give you a hand. One more type of tax to be aware of, and that's the idea of a proportional tax, which is a tax where the proportion of income paid stays constant as tax levels rise. Now, that doesn't exist in the UK. It's an idea that's been proposed. We've seen it a little bit in Eastern European countries, and the argument is that it's more equitable, it's fair. It's also really easy to collect because it's much simpler to measure how much people owe. The downside is that you end up taxing the highest earners much less, and so governments lose revenue. If it helps to visualise it, have a look at this graph. As income increases, the amount of tax paid will look different depending on the type of tax. So if we had a progressive tax, the amount of tax paid increases as income increases more than income increases, so the average rate of tax increases. A regressive tax does the opposite. The average rate of tax paid decreases as income increases. A proportional tax will be slap bang in the middle. Don't worry about getting that graph down in your notes. This has been a very quick overview of some of the main types of taxes in the UK. If you're unsure about anything on this, have a watch through the video again, or have a look at the links I put below explaining some of these concepts. Next time, we're going to be thinking about some of the principles behind taxation, what makes a good tax, and we'll be evaluating the impacts of taxes on the UK economy.